Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday. It's May 30th. Hope you guys had a great weekend here. Thanks again for those who served and protected our country for Memorial Day weekend. Let's jump right into it. We got a lot to go over today. We have actually a lot this week. We have the job numbers this week. So tomorrow, expect to see ADP come out. We got the weekly jobless claims on Thursday, and of course the Bureau of Labor Statistics numbers on Friday. So today we'll start with the personal income for the month of April. So back in March we had 0.2% increase in personal income. Forecast came in at 0.4%, and it came in line with the projections at 0.4%. So good overall numbers there. People are making more money. However, we got the opposite side of the spectrum with consumer spending for the month of April. And March numbers actually was revised higher, went from 0 to 0.3%. So that's good for the economy because people are spending money. And then for the month of April, was, again, also like personal income went up. Forecast supposed to be 0.4%, and it came in line at 0.4%. So overall, personal income and consumer spending both rise 0.4%, which is good news. Now, here's what we're waiting for. We got core inflation. This is the personal consumption expenditure when you strip out food and energy, which creates volatility. And this is what the Fed's favorite gauge for inflation is. So back in March, we had a drop dropped 0.2%, which brought us to 1.6% year-over-year 1.6% rate at inflation here. And forecast for April is supposed to be 0.1%, but it went up only 0.2%. Now that brings our year-over-year core inflation to 1.5. So you think going 0.2% going up, but they're looking over the last 12 months for the ratio, and we're only up 1/2. That brings us again further away from the 2%, what the Fed's target rate of 2%. So it'll be interesting to see. We have the meeting coming up on June 14th. They're expected to raise another 0.25% at that, but with inflation going the opposite direction, is that going to kind of prevent them or not? So we'll have to wait and see. There are some Fed speakers speaking. We got a couple even today. Next week, most likely, you'll probably start seeing them go into their blackout period where they don't speak before their meeting. So let's continue on with this. We got the Case-Shiller Home Price Index. This is an index that helps gauge the 20 of the largest markets in the U.S. And we had a 5.9% increase in the month of February, and it went up 5.9% in March. So a lot of it, of course, is due to the lean inventory that we're seeing out there. There's not a lot of people listing their homes for sale out there, so which is that low inventory is creating more demand and still kind of bringing home prices up. Now, last but not least, we got the consumer confidence level. We had 119.4 in the previous month in April, and the forecast for consumer confidence in May projections are 118.6, and it came in at 117.9. So a little bit under what forecast was, but the numbers when you look here are actually still pretty high numbers. So even though we're down a little bit, we're still overall pretty high numbers here. So I won't fret too much over that one. So overall, I think actually we've had some pretty good numbers. The one, of course, the concerning one is watch on this core inflation because it seems to go in the opposite direction. And with the Fed raising rates, that's usually what staves off inflation, keeps inflation in check. If they keep raising it, do they force us into a deflationary period or not? So are they raising rates too soon? I guess it might be some questions that might be thrown out there as we get closer to these rate hikes and such. So let's take a look here. Currently, the stock market's down. It's been kind of on a nice low level here. We got S&P 500 as well as NASDAQ in new high territory. Dow's within 30 basis points. But we had quite a little bit of a string there for about a week with the indexes going upwards and continuing upwards. Today looks like it's just taking a little bit of a break, kind of a breather as to next move right now. So let's go ahead and take a look here at the bond market here, and bond market's up. We're actually up about 3 basis points. So as you can see, we're up against this first resistance level, which we did on Friday as well, and we've been down. We got this 10-day moving average, which is kind of helping us, pushing us in this level. But at some point when we reach this, it's going to push us one direction or another, and it could push us lower here. So we've been at this level before, obviously, and every time we've always come down a bit. So just be very cautious here in this level here, but rates are about the same as where we left off on Friday because we're only about 3 basis points difference. Typically it takes about 12 basis points or more to really make any changes in the interest rates. But right now we're up 3 basis points here as a result. So that pretty much concludes it for today's recording. But if you guys want to get more information throughout the day, just come over to Twitter. You can find me at Mike Bjork on Twitter, and you can catch even after the recording here, what updates we have posted throughout the day here. Also, if you guys are in the market for refinance or purchase, I can help you out. I am a loan officer, so I can help you with your refinancing needs, either going from adjustable rate mortgages, which seems to be pretty popular these days, going from adjustables to fixed. We also can put you into from a 30-year to a 15-year, or we can even do stuff like taking equity out of the property, since now a lot of people have equity, and reposition into other needs, whether it's investments or debt consolidation or such as those. I can also help you with your pre-approvals and purchasing of your next property too. So we have a lot of different strategies and different loan programs we can assist you with on those. Alright folks, so you guys have a great day. Thanks so much for watching. I'll look forward to see you guys tomorrow, Wednesday, and take care. Bye-bye.